Today we're at Parlor in Kansas City and we're tackling a crucial aspect of closing on a home: strategies to lower your interest rate. Interest rates are the major stumbling block for most potential home buyers right now, but it doesn't have to be. I'm Joe Nelson of the Nelson Home Group, Google's highest rated real estate team in Kansas City. Stick around to the very end because I'm going to tell you about how one of our clients actually got money back at her closing. Now let's talk about 5 ways you can get a lower interest rate on your new home. When it comes to purchasing a home, your mortgage interest rate significantly impacts your overall expenses. The most immediate concern with higher interest rates is how it affects your purchasing power, your monthly payment. The first tip in lowering your interest rate is elevating your credit score. Lenders use this as a yardstick for your credit worthiness, meaning how reliable is it that they will earn on their investment in you. Pay bills on time, maintain low credit card balances, and dispute any inaccuracies in your report. Even a slight increase can positively impact your rate. The higher your credit score, the less of a liability risk is placed on the loan and the better rate you'll get. If you're not sure what your credit score is, go to annualcreditreport.com and get your free report. There are tons of websites that claim they can give you this information. They're mostly all educated guesses because the exact process the credit bureaus use is actually copyrighted. Tip number 2, avoid settling for the initial offer, at least not until you've seen what other lenders can do for you. There's a common misconception that every application you'd submit causes a hard hit to your credit score. In reality, consumer reporting bureaus expect you to shop your rate. Once the initial report is pulled, you can apply with additional lenders for up to another 45 days of your first credit check without another hard inquiry on your report. Explore and compare rates from various lenders. Interest rates are much more negotiable than most people realize. Each might offer distinct terms or programs for unique situations that you might have. So take your time to find the ideal match for your financial circumstances. This is also where an experienced realtor can provide invaluable expertise because they work with a variety of lenders and programs to make sure you get the best fit for your situation. Also, don't forget, lenders will not be able to lock your rate until you have a sales contract in place. So while shopping around, you can get rate quotes in real time, but just know they will change when you go under contract on the home. Don't worry, it's not too late to continue shopping once you have a contract. Circle back to those lenders and see what they can do for you. One bonus reminder, the closer to closing that you are, the better the rate you'll get when you lock. If you're 20 to 30 days from closing when locking, you're usually going to get a better rate than when you're 45 to 60 days out. Again, the right lender will be able to advise you on the specifics. Tip number 3, buy down your interest rate. You may have heard the term mortgage discount points. Well, each point you purchase from your lender at the closing table costs 1% of your mortgage amount. By prepaying your interest at the start, you can reduce your rate by roughly 1/4% for each point. Let's say you purchase a $320,000 home in 2 points for $6,400. Your interest rate would go roughly from 7 to 6.5, and your monthly principal and interest payment falls from $1,703 to $1,618, saving you almost $100 a month and nearly $30,000 over the life of the loan. Your lender should give you all the specifics when discussing your terms and options. In this scenario, it would take you a little over 6 years to break even from that upfront investment, so it all depends on how long you stay in the house. Tip number 4, negotiate those discount points into your contract. This one takes skilled representation, but you can potentially get your discount points covered for you by the seller. Again, it is so situational. If you find yourself offering on a home where it's been on the market for a while and there aren't other interested buyers or multiple offers in place, the seller will likely be willing to cover some of your closing costs, which can be used to buy down the rate. With a trusted agent on your side, you can lock in a commitment for a seller financial concessions at the time you go under contract and get a win-win agreement for you and the seller. If this is the fresh hot listing that just hit the market and there's a lot of interest from other potential buyers, the seller may not be willing to cover those closing costs. Tip number 5 is for those with a bit more flexibility month to month but want to save money in the long run. Consider opting for a shorter loan term if feasible. While monthly payments might be higher, shorter terms often come with lower interest rates, resulting in significant long-term savings. This can lower your rate by often as much as a full percentage. Story time. We actually have a buyer under contract on a home right now that was able to employ some of these strategies. First, he has excellent credit, so that helped him a ton. Additionally, we negotiated for the seller to cover $5,000 in closing costs. We took about $1,000 of that and used it to buy down the rate, and will soon be closing on his new home at 6.25%, as opposed to the roughly 7% most buyers are seeing right now. So that was 5 ways to reduce your interest rate. But how did our buyer actually get money back at closing? And no, I don't mean she walked out of there with slightly lower closing costs. I mean check in hand. She used a specific first-time homebuyer program that not only gave her a 5% down payment grant, it also covered her closing costs. So at closing, she was refunded most of her earnest deposit with a check. These kinds of stories are things we often see, but it is specific to your needs and wants. Reach out to us today and we can guide you through your options as well. All right, guys, thanks so much for watching. If you found these tips valuable, hit that like button and subscribe for more Kansas City real estate and lifestyle content. Also, don't forget to come check out Parlor for yourself. It's a really cool spot with comfortable seating, several food truck style dining options that are all delicious, and even a couple of bars. I highly recommend it. And if you're looking to make a move in the Kansas City area, let my team be your experts. My phone number and email are in the description below. Cannot wait to hear from you. See you next week.